Hey, let's roll in. Saturday, February 16th, 7 o'clock in the morning. Okay, so let's go over these stocks. Apple, BIDU, Facebook, Starbucks, FedEx, Coke, Kraft and Heinz, and Kellogg's. I think I may be missing one more. And then we'll quickly look into where the broader market is going in the context of S&P 500, crude oil futures, and silver and gold. Okay, let's start with Apple. So the way to see my charts is obviously there is a chart. We have the blue line, which is a 50-day moving average, and the yellow line is a 200-day moving average. And I usually follow these cycle patterns. Stocks moves in cycles, so you can see here. You can draw bigger circles and smaller circles so that you can see where the next move is going to happen. Okay. And I have on the bottom, there are a bunch of indicators. One is the first one is the volume indicator. This means how much of the volume is happening in a given day. Second one is accumulated distribution. This tells how much money is coming into the stock, how much money is going out of the stock. The third one is MACD histogram. This tells whether the stock is in the positive momentum or the stock is in the negative momentum. The fourth one is implied volatility. This is also very important. This is the panic indicator for a given stock. The more panic it is, the more high this goes. There is something. There will be more swings in the stock, or there is more panic in the stock. The low implied volatility means people are not worried about it, which is a sign for bullishness. This means the stock is going to rally. The last one is RSI indicator. This indicator tells whether this is in the overbought territory or oversold territory. Depending on that, if it's in the oversold territory, it's probably the time to buy. Not necessarily always. You need to put the other indicators into the context. So that's how my graphs are. This is a 1 year daily graph. And I also use a different tool called Profit Charts. This is a 5-year weekly chart. Obviously, I see the weekly volume here, but this is on a 5-year chart. So let's roll in. So let's take a look at Apple. So Apple year to date up 8%. And that's in line with the S&P 500 SPY. SPY is 11% up, so Apple is still 3% behind. Usually both are correlated. So you can see here when the death cross happened, everybody think, oh, the world is going to come to the end. But it actually showed a good amount of downside, like $20 or $30 for Apple stock. That's huge. It went down from 165 to 140-ish. So now a lot of the damage is undone, right? So you can see here when the stock moved up to in the range of 50 to 200-day moving average. So this is more of in the safe territory, at least for now, that came out of the falling knife effect. So I draw a few circles here. Sometimes I may not draw them properly, but let's draw them again. Drawing. So let's take a look at that. That looks like a reasonable cycle here. See here, the cycle ended here. It tries to bounce, then it come, and then there is a bounce. So this is a downtrend. It's most likely going to keep that 160, and Apple is going to be range bounded between 160 and perhaps 190-ish. Let's take a look at the other stuff is, you can see the huge money flew into Apple stock in the beginning of the year. This is not just Apple, most of the stock market. So stock is in the green, positive momentum going on. So all that negative momentum is gone. There is a crossover here, right here. It moved back again. So that's where it gets into the positive mode. So we'll see how long this positive momentum will continue. We'll put this in the perspective of S&P 500. So have a low volatility right now. This means stock is in bullish mode. Stock is reaching the overbought territory. So let's see what that means in a bigger chart. Let's go back to profit charts here. Apple. So in this, I use slightly a different indicator. So I use a Fibonacci bands on a 5-year charts, right? So, but you see here, Fibonacci bands are basically the retracement levels, like 23% retracement, 38% retracement, 50, 61, 78, and 100, right? So you draw from the lowest point to the highest point. That gives you nice bands. You can see here. Let's zoom in a little bit. Okay, you can see here when I draw this band, it is honoring the bands. You see, right at 140, that's 61.8. 140, 132 is the 61.8 retracement level. So this retracement level tells that it's going to just bounce back. So you see that it's just touched and bounced back. And then you see here. So that's 175.82. It just touched and then came down again. So this is based on the data from here to here. Okay, you can predict where your bands are. Look at this volume here. All these black bars. This means this is positive momentum. So massive rally here, like $30 from the bottom. So we'll see if this can shoot past 175. If it does, then the stock is going towards 200, which most likely going to be the case. But we need to put this in the perspective of S&P 500. So let's take a look at S&P 500 in the context of Apple. So I use SPY. SPY, we did the same thing here. You can see here this market is going straight up. It's likely going to test that 290 level again. So there is no slowdown right now. Looks like February is going to rally. Let's switch back to, that's about Apple. Let's switch back to BIDU. BIDU, same thing. All the beautiful patterns for BIDU. You can see here, I've been tracking this for a while. I don't trade BIDU, but you see the cycle pattern here, cycle pattern here. So the cycles are ending here, and this is again in the range of 50-day and 200-day moving average range, just like Apple. So you see these two cycle patterns are starting up. So that means it's going to bounce from here all the way to in this range. So this looks like, to me, super bullish. This 2.3% down on Friday is basically getting back to that band. So based on cycle patterns, this stock should rally next week. Accumulated distribution, not that much is coming in. Still in the greener territory. Medium range implied volatility. Medium range RSI. So likely chance that it is go towards 200. Let's see on the 5-year chart how BIDU looks. This is really interesting here. So I draw the same thing, Fibonacci bands. So it is testing that band range, that 170.37, 170.37, 170.37. It's right there with cents. So if Tuesday trading continues to be a positive close, then the stock is going towards 192. That's your next stop, right? So hope that happens. Next one, let's do Facebook. Facebook. This looks like bearish to me at the moment, but again, nice cycle patterns here. You see here, there's a cycle. We can draw a smaller cycle as well. Okay, that gives a little bit more. So it's going to be choppy, in fact. So there is a big circle coming down and there is a small circle starting up here. So it's going to be choppy in this range between 162 and 147. But if you look at, there's nothing special about accumulated distribution. It's just no swings. MACD, you see this turns into negative momentum. So it's most likely going to come down to 147. Same thing with RSI. It tries to break above that level. It could not go up. And then it's trying to retrace in these bands. So this is going to be range bounded. On a longer term chart, Facebook, beautiful Fibonacci band. It is trading in that band, so this confirms that it's likely going to stay in this range at least for now. Normal volume, there is no substantial, some positive weeks, some negative weeks mixed. So this is likely going to stay in a range. Next, Starbucks. Starbucks, okay. Starbucks year to date 10% up. This is in a bullish run. You can see this is in a 50-day. This just had a new high, 71.54. So it's straight up. Accumulated distribution, same thing. Money is flowing into the stock. Positive momentum, low implied volatility. That means stock is still in the rally mode. But the stock reached to overbought territory. So to cycle bands, it's going to a little bit rally here, and then you see these two cycles coming down. So it may retest this 65 level maybe. But overall this chart looks good on a 1 year. Let's take a look at the long term. Oh my god, look at this volume. Last couple of weeks, buy. Let's draw a Fibonacci. Well, this is all high. So if this band happens to be correct, because we are drawing against the 52-week high, so retracement will be $262. That's $8 from down from here. So I wouldn't touch the stock. If you have money already in, take some profits, wait for a dip and buy back again. Buy back at 62. Next, FedEx. It's interesting thought that I think we should look into these FedEx and UPS as a gauge to what's going on in the broader market. That I usually use that as an indicator. FedEx. FedEx got whammied this year, but still year to date up 11%. But last year the peak was 266. Now it's trading at 180. That's like $80 down. But if you see, the damage is undone. So now it's trading above the 50-day moving average. So that means it may go into this range, or it may go down from here as well, because there is no positive confirmation that it's going up. Looking at accumulated distribution, same thing from January. Money flew in, new money flew in. MACD looks good, but it looks like it's exhausted, but it could be a longer MACD. It's still in the positive territory. Implied volatility, very low implied volatility. People not worried about this stock. So this could mean a bullish sign. RSI is still in the medium range. It's not still in the overbought or oversold territory. So let's take a look at 5-year chart on FedEx. Beautiful bands. You see here the Fibonacci band 150 just hissed and went back. So now it's trading in these bands, 175 to 194. So stock is most likely going to go up to 195. This is bullish. We can see the volume coming in. The sell volume is pretty high, but last couple of weeks more bars where the money come in or the volume come in. It's trading at a decent volume. So it's a bullish. Next, Coke. Coke. Who don't love Coke? Year to date, dismal performance, 4.5%, where the S&P 500 rallied close to 10%, 11%. So there is a deviation from S&P 500, almost like 15%. This is one of the consumer defensive stocks. Usually when the market rallies, Coke will be down, money will flow out of the Coke because it's not a growth stock. But when market turn cautious, the money flow back in. So that's what happens. So that's why you see from January, it came down. It came down significantly. So this is it just dropped this 200-day moving average. It came below the 200-day moving average, close below. This is super bearish, but sometimes market makers can deceive you. So they just seems to be going down, but they take it back again, back up. So we have to really wait and see what happens next week. But you can clearly see here, money flow out. I think that was because of some comments made by the Coke CEO that next few quarters are looking, they have lower guidance. So stronger dollar is definitely hurting them. and price pressures because of inflation. Their profit margins are shrinking, but they will raise the price. They are immune to that. People don't care paying 20 cents extra to the Coke. This stock right now came down into the negative momentum. We don't know how long this is going to stay, but at least as per the cycle patterns, another week of downturn for Coke. So I would wait to buy, don't jump. On a 5-year chart for Coke, yeah, this is very good. The stock overall in the ascending. You see here this channel. I draw this channel 4 years back. Starting from 2015, right? So this is a beautiful channel going on. The stock is trading in that channel. If that is true, obviously, I draw a line here. So if that is true, Coke is a buy at around $43 or in between 43 and 44. So if it gets $1.50 or so, I would start buying it, because sometimes it's very hard to catch the bottom. So I would wait for another $1 or $2 and then buy Coke at 44 or 43. That's where I start taking positions. Huge volume downturn. So it's going to be wacky for next week and then buy. Next, KHC, Kraft and Heinz. KHC. I love cheese. Okay. This stock up 10%. They have a lot of brands, snack brands, cheese, many very diverse portfolio. This is in the range of 50-day moving average and 200-day moving average. So this probably going to touch 55. Trade in that band. If the overall market goes up, this can trade according to that. Still good. MACD still in the green territory. Implied volatility high. Implied volatility high means not necessarily stock going down, but it also could be stock going up. These are the option traders. They buy or sell options at more premium. If the volatility is high, you pay more price for the options. So we expect the price swings here. Obviously the results are coming up, that's why the implied volatility is higher. So RSI in a overbought territory are getting close to, or no, actually in the middle. So let's see the longer term chart. It does not give me a good indication. KHC. Yeah, so let's draw a pattern here, starting from the top. Hopefully this is the bottom here. So $53.27 is the band. 53.27. 53.27. Okay, yeah. So that's like touching 200-day moving average. So yeah, so if it's going to rally from here, it's going to rally another $3-4. But there is a good volume, positive volume coming into the stock, so pretty hard to say at this point. But given in the context of Coke, I would wait. But this is relatively bullish compared to Coke. Kellogg's. I already have a position in Kellogg's. Let's see Kellogg's. Kellogg's flat. Cereal maker. Lot many brands in that territory, breakfast territory. Stock down from $75 to right now trading like 55, like 20 bucks down on 70 from the peak. This could be trading in discount, but let's see. Beautiful cycle patterns. So from here, the cycles are up. It's supposed to rally. I expected more bigger rally here, but it rallied a little bit. And now you have a resistance at that level, and then it may go down back again. So accumulated distribution, very interesting. The money is coming in. The money is coming in with high volume. The money is coming in with high volume. That's a sign for bullishness. That's definite sign. But the technical indicators are showing MACD is hovering over here in the middle. Low implied volatility. This means stock could be bullish. So I'm long already. So I'm expecting this to bounce into the 60s. This looks a little bit more stronger bullish case than the other two. This could be a grab at this point. What can go wrong? Let's talk about the broader markets. Yes, S&P 500. I use the futures to see, but you can also use SPY, SBUX, which are the ETFs. Look at that boy. It just crossed 200-day moving average right there. Very bullish, very bullish. Or it could be a trap. We don't know that, but it's about 200-day moving average. So all the damage done with the dead cross here are unwinding. Let's see if from here the market continues to rally, then we are looking to go into 2900, 3000 territory. It'll definitely, if it keep going up, then it'll retest that 2900 level. That means all stocks will rally, more candy for more sugar and candy here. So hope these will rally. Let's look into the oil, what oil markets are telling. Typically, oil markets give early warning signs. If the stock market is going down, oil will be sold off first. Oil, according to the cycle patterns, beautiful cycle patterns, is supposed to go down. Didn't go down much, but again came back into the bullish territory. So cycle patterns are bullish here. Accumulated distribution, money coming into oil. You can see here, good amount of money. It's still in the green, MACD, and it actually started going up. I can't really say implied volatility here. RSI, it's reaching overbought territory, not yet, but oil looks like it's going to rally towards 60. Let's look at gold. What is gold is telling? So gold, interestingly, this is a very positive sign for gold when 50-day moving average crossing 200-day moving average. So very bullish mode here in the long term. In the short term, you can see here both of these are coming down cycle patterns. Whereas you see oil and S&P 500, they are in the bullish and this is in the bearish. So that's a correlation. When the market rallies, gold and silver don't rally, or sometimes they do rally, but in general, you want money moves out of gold and silver and into the stocks. So this is in line with the market rally. So I expect next week the market continues to rally. There is absolutely no signs of slowness. Silver. Um, Silver and gold trade sometimes inversely, but if you're a long-term silver holding, look at this flag. This just crossed. So this is a sign of bullish. So silver is a screaming buy. Let's take a look at on the 5-year chart for silver. Um, uh, this is why very interesting. So it formed a W pattern here, and then rally, and the stock is trading. ETF is trading above that. This W pattern is a sign of bottom, bottom in the gold. So I expect this whole year silver to rally up, up, up. So I have huge positions in silver. I didn't have any positions in gold, but I had huge positions in silver because it needs less money to buy. Somehow I'm not trading gold. Let's look at GDX, gold miners. Gold miners, I trade gold miners because I trade GDX with options as well. So this is in the Fibonacci band towards 24. So overall, gold, silver, gold miners, these are all good buys throughout this year. There will be pressures for interest rates, but it won't be as aggressive as last year. Like 4 times they raised the interest rates. Maybe they slow down this year a little bit, and maybe they do it 2 times. Who knows? But whenever their interest rates are going up, gold and silver will come under pressure. But if you're a long-term buyer, buy silver right now. That's all I have. Happy Thanksgiving. Bye. Oh, sorry. Happy President's Day.